For the last 30 years, you have followed a specific set of rules. Save, invest, ignore the markets, don't let the headlines spook you, and everything will be fine. Well, the day you decide to retire, all of that changes. Hi, I'm Will Hoffman, and this is the new podcast, Pre-Retirement Navigated. It's a project we've been working on for a long time. It's going to correspond with a video series on YouTube, so make sure you check that out as well. If you want more formal, scripted, structured videos about everything we're going to talk about in the 5 years leading up to retirement. But this is where you come to get the podcast type footage from a host who's been doing this for 23 years. For 23 years, I've been helping folks get ready to retire, live through retirement. And I've seen a lot of things go on that I want to talk about, which is why we created this podcast. So this is our kickoff episode. We're going to talk about the six flips that happen. One of them is actually a flip and a half, let's call it that. And the flips that happen and the rules that change in the 5 years leading up to retirement. Now, what's coming? We're going to go through an episode that talks about every year leading up to retirement, counting down to your actual retirement. And then we're going to go deeper and we're going to talk about individual topics and how they affect you in those 5 years of retirement, things that you need to be preparing for. And that's where we're going to get very detailed around things like sequence of return risk and things like Social Security claiming strategies and making those decisions. But we're going to start on a much higher level and then get much more specific as we start to get deeper into these topics. So I thank you for joining us. I hope that you take something from this episode. If you do, we're going to have plenty of links in the show notes that if you have questions, you can engage our office, reach out to us, schedule a discovery call, and see if there's a way for us to help. Also in the show notes is going to be what we call our pre-retirement checklist. This is going to be all of the things that you should be analyzed leading up to retirement so that you can see where you are, where you still need to go, and if there's some work that still needs to be done. So let's get into this. Everything changes when you're getting ready for retirement. The game starts to change. It goes from accumulate to distribute. It goes from this pile that you've built into how do I turn this pile into income? And there's a lot of flips that happen. And these flips and these rule changes, they're going to be the spine of this entire conversation. So let's talk about the first one. Time used to be your biggest asset. Time used to be what you had on your side. The market drops, that's all right. There's time for it to come back, and I'm going to be investing more. I've got 30 years, I've got 20 years, I've got 10 years until I need this money. Time is your greatest ally. Now it is your biggest constraint as you get closer to and into retirement. And the first thing you have to figure out and why this rule changes so much is you need to put a stake in the ground. You need to decide when that retirement starts. I know for these last 30 years, it's been very ambiguous. Maybe in my early 60s, hopefully by the time I'm 65, maybe when I'm 62, or when I feel like it. Listen, none of us feel like going to work all the time. So when I feel like it, kind of seems like the most logical choice. But now you have to have that date. Everything is contingent from that date. Every Social Security decision. I know that not everything is a portfolio decision, but everything's kind of a portfolio decision. And you need to make that stake planted in the ground that says, in June of 2031, that's when I want to retire. That is when all of this becomes real. That's this 5-year window that I have to work with. We're going to have an entire full conversation about year 5 and why that stake is important. But once everything becomes real, every other decisions hang off of this date. And it's very important that you put your stake in the ground and decide when you want to retire. Now, it doesn't mean it can't change. Hopefully it changes on your terms and doesn't change because of a health concern or a decision that your company makes or a decision that you make maybe as a business owner. But we want to make sure that we are planning with a firm date in mind. so that every decision becomes a lot more concrete. So that's the first rule, is that now time is not your ally, time is your constraint, and let's build that date. The second rule that flips, and this is the one that I see folks, I think back to the old, I can't remember who it was. There used to be the commercial of folks carrying around their number, and that was the goal. Getting to this number that you can retire on was the goal. And they would have folks walking through New York City, and they were all carrying this number. And I think there was just a new study, and we'll have to check out who did this. It did a study that was $1.46 million is what folks think they need to retire on. I want to get a confirmation on who did that study. Bryn, our behind the scenes producer, who looked that up for me. It was Northwest Mutual's study that was $1.46 million is the number that the average American wants to be carrying around. If we go back to those ads from the early 2000s, that's the number that most Americans feel confident that they're carrying around. But the number is no longer the goal. The pile that we build is no longer the goal. It's how much you get to actually keep. That becomes the goal. And not just keep, I would say, how much you get to use. Keeping it's nice. Using it, that's what retirement's about, especially early on. Using it to travel, using it for experiences, using it for what we want to do and why we're retiring and why we've been building it. So how much of it you get to use? Because you think about it, when we're saving for retirement, we're saving most of the time on a pre-tax basis. So some of us use that savings to lower our tax bill as we go. Some of us use that as a mechanism to lower our tax bill. Well, now when we're done earning, that mechanism's gone. We're taking out of what hasn't been taxed yet, and the taxes are due. So understanding 4 years leading up to retirement, the tax impact, and starting to think in tax brackets, and starting to think we're going to have an entire episode dedicated to what we call the tax control triangle. And the three corners of this triangle become so important: where your assets are located and why thinking in tax brackets becomes so important is the mission. But thinking beyond the pile and into how much you get to keep is ultimately what our mission becomes. So that's the next rule that flips, is not necessarily growing the pile anymore, but using it, and using it as effectively as possible is the mission. Flip 3 is flip from offense to defense. I was a basketball player. Most sports, you're either playing offense or defense. What I love most about basketball is you have to play both. Hockey, you have to play both. They're fun sports because you can't just be a good goal scorer, or you can't just be a good shooter. You've got to be a good defender also. Well, for 30 years, you've played offense, and offense meant investing, maybe with reckless abandon. The goal was always growth. The goal was always, let's accumulate as much as possible. Let's invest with a growth mindset because, like we mentioned in the first flip, time was on your side. So let's grow. Let's invest. But now we have to approach this different. We've got to play defense. In addition to our portfolios and investing beyond a 30-year average, we've got to be thinking of sequence of returns. The biggest thing that can impact you early in retirement is you're drawing money from your portfolio and the market is taking it down. So how do we defend against sequence of returns? That's going to be a big video. We're going to talk about that in year 3 leading up to retirement. In addition to that, we're going to have multiple videos in this series and multiple episodes to talk about sequence of return risk, because it is something that causes people to have to go back to work. It is something that causes people to lose sleep. It causes every headline to be louder. Every font of the headline gets bolder because we are worried about what happens, especially early on. And there's a lot of averages and a lot of formulas there. In addition to that, playing defense means the guaranteed income portion of our portfolio. And by a guaranteed income, I'm talking about Social Security. Making the decisions as a couple versus as two separate islands. is so, so important because stats tell us most of the time one of you is going to outlive the other. And whoever is living longer, that's the benefit you need to calculate first, not what are we bringing in right now. Thinking about Social Security as longevity insurance, thinking about Social Security as the biggest income stream possible for the remaining spouse is so important. And it comes into playing defense because that's what you're going to be using into your 90s. We sit down and talk to clients, and I can't picture two 62-year-olds sitting in front of me. I have to picture one 92-year-old sitting in front of me because that's what the stats say is in a 65-year-old couple, one of you is making it to 92. I believe it's 25% of the time. Again, I want to check the stats there, but we can't sit here as a financial advisor and worry about two 62-year-olds. I need to be worried about one 95-year-old and making sure you're not eating beans from a can, because that's what Social Security creates. Social Security creates longevity insurance, and it gives you that. And making those decisions, think with a different mindset than how much can each one of us get right now, is also so, so important. And it's part of playing defense against your retirement. So the stat is 50% of a healthy 65-year-old couple, one of you is going to make it to age 90. So when we're making these decisions, don't think of it as two healthy 65-year-olds. Think of it as what is going to be helping one healthy 90-year-old who may have another decade to live. How are they going to be paying their bills? Because we know Social Security is a good inflation hedge because they do adjust that based on cost of living adjustments. Thinking about Social Security as a defense mechanism for our retirement is a very important way to consider that. You have been driving hard on your career highway for decades. Foot on the gas, eyes straight ahead, on your way to retirement. But when you hit that 5-year stretch before retirement, every pothole seems a little bit deeper. Every traffic jam seems to last a little bit longer. Every construction zone seems to be a little bit more dangerous. And every change in lanes seems to be a bit more aggravating. You are not alone. That is exactly why we designed the navigation formula as our proprietary process at Hoffman Wealth Management, helping you navigate the time before retirement when all of these things start to stack up and these decisions start to seem a little bit more important. As you're listening to the Pre-Retirement Navigated podcast, if there's something that you have a question about, please feel free to book a discovery call with our office. The link is in the show notes, and you can always call and ask any questions you have about something you hear here. Now, back to the Pre-Retirement Navigated podcast. Flip number 4, and this happens 2 years out from retirement. At least in our conversations, we like to have this conversation 2 years out, is flipping the pile into a paycheck. We talked about it in year 4, but now we want to start getting a lot more specific about which account is each dollar going to come out of. Do we take it from your traditional IRAs or traditional 401ks? Do we take it from non-qualified assets because the tax code's different when it comes to capital gains versus IRA distributions? What about the Roth stuff? Are we really going to save that for later? Should we save that for later? Or does income make more sense coming from that? So we want to map all that out. I have a sneaking suspicion this is going to be a lot of conversations and a lot of videos and about how each one impacts the other. These assets that I've accumulated, how do they become a paycheck and how do they get me through retirement and having an enjoyable retirement? Now, flip 5 and flip 6 all go on in the last year leading up to retirement because it's not about your money at all. It's not about the balance. It's not about taxes. It's not about investment performance. It is about you and having a hard conversation with yourself and a good handle really on your emotions. The first flip that's about you is when you go from decider and decision maker to actual operator. This is when you go from making decisions to executing the decisions that you've made. We're going to talk a lot about the things leading up to retirement, but in year 1, that's when you practice. Allen Iverson has given us a great quote about practice. You don't need me to reiterate that here, but it becomes about practice. Yes, we're talking about practice. You need to give yourself some time to live on what you want your retirement income to look like, especially when you have the safety of your current salary to back you up. I'm not saying deplete the accounts. I'm saying let's practice living on that income for a little bit. Let's go through the motions of what it looks like to draw from your IRA rather than receive a paycheck. Let's go through the tax liabilities that we're going to be encountering to make sure that we're comfortable. That's a big flip because now the decisions have been made. If you've done everything in these 5 years leading up to retirement correctly, the decisions have been made. Now it's time to practice. And the last flip actually happens the day you retire. That's a big day. It's a big moment. And the moments seem to get bigger after there because I mentioned this early on in this episode. Everything gets louder, all of it. And I've had these conversations with our clients, and it's amazing. The person that was saving for retirement and the person that's spending in retirement sometimes is like having a conversation with two different people because they didn't even read the news while they were working. They didn't care about the White House. They didn't care about what the financial news networks were telling us. They didn't maybe even read the internet or the newspaper. They went to work. They came home. They raised their kids. They took them to lacrosse. They did all these things without even reading the headlines. And now one podium visit in the White House changes everything, changes how they hear the news. They immediately think, how is this going to impact my portfolio and my retirement? And news becomes louder. Those headlines become bolder. The episodes of financial news on the financial news networks now seem to impact your thoughts a lot more. They keep you awake at night a lot more. You stare at the ceiling wondering, have I made the right decision? Have I done enough? That final flip is about gaining control of those emotions and gaining control of your reactions to those emotions and trusting what you've built over these 5 years leading up to retirement. Because I've seen it. Everything's been built, everything's been done. And now on day 2 of retirement, the market does something different and I want to change everything. And you have to be in touch with your emotions and making sure they're about you. We're going to have, I want to find I don't know if these even exist, a retirement psychologist, but I'm sure there's some psychology around this that I would love to talk to somebody on and bring some guests on it. And if you're listening to this or watching this and you have any ideas for that, please put those in the comments or let our office know, hey, this is a great person that you should interview, because I want to have these conversations, because that last flip is about behaviors. It's about emotions. It's so much more than just looking at a portfolio, being comfortable with the paycheck. That's going to be the precipice of this entire series. These big flips, why they're so important, why we have the emotions that we have when it comes to retirement. So I'm excited for this. If you've ever checked out our other podcast, Wealth on the Move, this is going to be a little different. It's just going to be me. Bryn's behind the camera and at the computer, making sure my stats are accurate. It's just going to be me talking to you about what happens in these 5 steps leading up to retirement and giving you some insight as to how to navigate those appropriately. If you do have questions, again, I mentioned this at the beginning of the episode, there are links in our show notes to our pre-retirement checklist, or if you want to reach out to our office, schedule a discovery call, have a conversation about what you're going through and what this process looks like for you, because all of this is just general financial knowledge. Everything really comes down to your scenario and what you want to accomplish when it comes to your retirement. So if you do have any questions, please don't hesitate to reach out to our office. I'm excited for this series. I'm excited to see where this goes. I'm hoping that it's delivering the content that you all are looking for. But if you have any other ideas or any other questions, just chat me up in the show notes. You can always find me on LinkedIn as well, but the show notes is going to be the best place for you to comment on things you would like to hear or questions you would like to have answered as we go through this process. So like I said, I'm Will Hoffman, founder and president of Hoffman Wealth Management. This show is Pre-Retirement Navigated. I'm excited to get to work with you, and I look forward to seeing you on the next episode. Will Hoffman offers investment advice through Private Advisor Group, which is a federally registered investment advisor. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult with the appropriate qualified professional prior to making a decision.